After years of disappointing growth, the global economy has begun to accelerate, but the recovery remains fragile as countries, particularly in Africa, urge to invest more in their people. That was the opening salvo from the leaders of both the International Monetary Fund and the World Bank in Washington at the start of their high-level meetings with finance ministers and central bank governors from around the world. While South Africa is forecast to grow by a mere 0.7% in 2017, global growth, driven in part by developing and developed economies, is expected to expand at a healthy 3.6% this year.
They're calling it the broadest-based economic recovery in a decade. And while trade is picking up, protectionism is on the rise, while investments remain weak as policy uncertainty grows.
Nearly 75% of the world is experiencing an upswing. It's the broadest-based recovery in the last 10 years. Added to that, it is actually driven by investment, by consumption, and by trade. And it is shared between the emerging market economies, which, as you remember, were providing about 80% of growth in the last few years. It is shared between the emerging market economies, still active, also with other countries like Europe, like Japan, and the US.
47 countries experienced negative growth last year, and while a rise in commodity prices has seen Africa's two largest economies exit a recession, growth levels in South Africa and Nigeria continue to present risks.
It is still too low for the demographic growth, and for that region to take advantage of the demographic dividend of all the young people who are coming and are, trying to have access to the economy and have a job, it's too low. So, with all of our country members, we are engaging them in the direction of stabilizing, for those that are doing well, build up their buffers, and more importantly, really diversify their sources of economic growth. Because what we observe is that those that are heavily commodity dependent are faring less well than those that are already quite diversified.
If you look at the numbers in terms of how successfully African countries have invested in their human beings versus other regions, there's a real issue. And so over this next year, not only in Nigeria, but in all of Africa, we're going to focus on accelerating investments in human capital, we call it, but investments in health, education, social protection, so that Africa can prepare itself for the next phase in economic development.
Countries also urge to accelerate their embrace of the digital economy as a diversification tool. The mood certainly more buoyant than it might have been a few years ago, as countries are urged not to become complacent. In fact, in the words of Christine Lagarde, to use this period to fix the roof while the sun is shining. In other words, urging countries to use this period of harmony in the global economy to build resilience for future shocks we know will come. Bryce-Pease, SABC News, Washington.